The market's not staying absolutely flat. It is actually picking up. We're up 18 points now. 11,321 is where the market is at right now. The Bank Nifty, by the way, is added on a bit more. It's up 0.75%, which puts it at the day's high. The broader market, mid and small cap indices have also cut their losses by a little bit. There you go. We're just about surpassing the previous high of the day, 28,640 on the Bank Nifty. G. Chokalingam is with us right now, founder, managing director at Equinomics Research and Advisory. Choka, thanks very much. Good morning. You've got 3 stocks that you're putting out as good ideas right now to buy, and we'll get to that in just a bit. But before that, just a quick word on the market per se, how you see it. We've had a sharp move up. Do you see it lasting, or do you see bumps along the way?
No, I am expecting, particularly the small and mid-cap space to continue to rally till first or second week of May. Then the post-election, as all of us expect, things would change. But the rally would continue for 2 reasons. Even after the recent recovery, a lot of small and mid-cap stocks are still down anywhere from 25 to 40%. And secondly, a lot of large-cap stocks in Nifty, they have a problem of growth. Many sectors are, growing in a poor single digit. So therefore, this time, in the short term, the mid and small cap should outperform the Nifty or Nifty stocks, and the rally should continue, few days before the results are out.
Happens once the results are out?
Results are out. I still have one different view. We had a lot of disappointments with regional parties for last 2 decades. But this time they may act smart. Even if they come to power, we may not have a kind of instability we saw in the past. So therefore, I don't expect any major crash in the market, whatever is the results outcome.
Choka, let's talk about a couple of stocks that you're recommending from the broader markets. Emphasis, do you think that maybe this would be probably the time to accumulate the stock at current prices, and it could probably be an outperformer, resilient if in case there is volatility?
Yeah, certainly. The stock is down 27% from the peak, and PE fund is a very smart fund. They have been selling and also doing buyback, in the process keeping their stake intact. And ultimately, the PE fund's aim is to unlock value. So we already seen the consolidation happening in the mid-sized IT space. So in my view, even Emphasis can join once again the consolidation process. Even otherwise, valuation-wise, very attractive, sitting on a lot of cash. So the buyback also would continue. So therefore, in the short to medium term, one can expect minimum 25% return in Emphasis.
Minimum 20. The other one, which you're not recommending, but it's IT, is Mindtree. Choka, you've tracked it before. I don't think you have an active recommendation on it now. Reports about L&T being the front runner to buy VG Siddhartha's 20.4% stake, launching it's been described as a hostile offer. Probably they'll have to offer a steep premium if it's a hostile offer. What would it mean if you own Mindtree?
Yeah. There could be some marginal upside, 5-10%. This is what I've been saying for the last 5 years consistently, that the consolidation would continue because the large IT companies are not able to grow the dollar exports in double digit, and that would continue because of the base effect and changing political factors. It would mean, ultimately the L&T could succeed, and open offer can fetch anywhere 5-10%. Why I'm not very too bullish on Mindtree is that it's already trading at a 2 times enterprise value to revenue. But this would trigger valuation upside for other stocks like Persistent and Cyient, which are trading at around 1.1, 1.2 times enterprise value to revenue. And the last 5 years, all the acquisitions are around anywhere from 1.5 to 2 times enterprise value to revenue. So this will trigger more and more M&A activities in the mid-size IT. So therefore, a lot of opportunities would be found in this space.
Okay, fair enough. Let's move on to what you are recommending. The next one is Nesco. You've recommended this before as well, and you're saying, well, it's a good time to buy now again.
Yeah. Today also, in fact, I sent out strong reiteration. I am recommending Nesco as a next generation stock. Last 10 years, the profits have grown, jumped to 5.4 times. Net profit margin is 50% because of the business model. Sitting on 70 acres of land. So far, only 42% of the land is used for IT parks and exhibition centers. Still 58% of the land available is, yet to be used. And, the business model is giving me a lot of confidence, and this land, would be used for further expanding exhibition center and IT parks, and balance sheet is very strong. Company sitting on 500 crore cash. The most important trigger would be the launch of metro station in front of the property. Across all the major cities in the world, wherever the metro station is there, that has promoted a solid, office hub. So that would happen to Nesco also. So therefore, I'm extremely bullish on Nesco.
Hindustan Zinc?
Yeah. So just as a tactical play, because of this election, so I thought it is better to have some large mid-cap like emphasis and also one large cap stock. I believe Hindustan Zinc is at bottom now. It can easily give you 320, 330 target in the short to medium term. The zinc price is down 17% year on year in the global market, but still the company has done reasonably well and still sitting on, a lot of cash. And governance issue also not unlikely to happen in this kind of company because the government is still sitting on around 29% stake. And medium to long-term trigger would be, there was a proposal to unlock value by, demerging silver business. Hindustan Zinc accounts for 95% of the silver production in the country. So all this would augur well. Tactically also the retail float of the stock is very low. So considering all these factors and also continued depreciation of rupee in the medium to long term, I expect Hindustan Zinc to be one of the good large cap stocks to create wealth.
Okay, all right, Choka. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So those are a couple of stock recommendations. Well, for the markets, absolutely flat. Mid-cap index down around 0.3%.